Good afternoon, Samir. Let me start by first thanking you for taking the time out for joining us on this knowledge session. We at Vivriti are very excited to partner with you guys on the growth journey of Revfin. Let to start with, it would be great if you can share the genesis of the entity that Revfin is and the journey so far.
Okay, good afternoon, Gautam, and thank you for having me here. I think so. I was working as a banker in London, and I had the opportunity over there to work with what was classified as the subprime sector for 2 years. And in that, basically, there were two types of customers that I was dealing with. The first was people who were new to the UK and hence had no data about them. There was no credit history, no banking transaction data, etc. So they were quote unquote thin files at the time. And there was a second set of people who had been there for a long time but had a very poor credit history, right? Which means they'd taken loans in the past, but they were thick files but had very poor credit history. The task that was given to me, since I come from a credit risk management and an analytics background, the task that was given to me was to underwrite these customer segments completely digitally. Right? And what I found is that with this customer set, either you have no data or the data that you have is completely unusable. So therefore, there's no data to underwrite. And if there's no data to underwrite, then you can't do it digitally, you can't do it through an algorithm. So the question was, then how do you do it? And so we said, rather than saying it cannot be done, let's just look at if there is another way to do this. So I started looking at how such customers were being underwritten by underwriters manually through a face-to-face interaction, and that was very, very interesting. I found that when a customer walks in and walks over to the underwriter, even before they sit down, in most cases the decision was already made whether to give them a loan or not. I found
it that's a very practical and useful insight. Huh?
I found it very fascinating. I said, what is it that these underwriters are able to pick up even before they've actually spoken to the customer, seen any documents? And it must be something, and it must be right, because the risk wasn't so high. They were actually able to underwrite the right set of customers as well. And I realized that ultimately they focus on certain behavioral or personality traits. They look at things like, are they well dressed? Are their files organized? Are they very upfront in the way they respond, or are they being evasive? So they were just looking at some very, very basic personality traits to make that decision. They didn't care about their credit history or their banking transaction history and so on and so forth. And I just, as somebody coming from a credit risk background, I found it very, very fascinating that such a thing could also happen. And then that got me to think that actually, we always in the financial service sector say that look at past financial behavior to understand future financial behavior. But here I was thinking, actually, if you just remove the term financial from there and if you just look at their behavior, that can also help you predict their future financial behavior.
Very interesting. Very interesting.
How do you understand that behavior, and how can you do it in a digital format through an algorithm? And there were many things I experimented with at that time. There was psychometric testing, so doing a psychometric test on people. There was gamification, trying to influence customer behavior through various sets of actions and consequences, and so on and so forth. And as I started on the journey, I found it very, very fascinating. And this is around 2016, 2017. And at the same time, I was based in London at that time, but at the same time, the fintech sector in India was really growing at that time. And I just thought that, the opportunity in India is much larger. It was the right time for me to come back and continue my thought process, but do it in India through my own company, and that's how Revfin came about.
I must say, these are some only person who've done it on the ground can understand the practical implication of some of these decision making, where you are sort of combining the old school with the new data sort of study in order to arriving at a decision making. So I must say, very interesting start to the thought process itself. Now you touched upon a very interesting piece on the opportunity in India, especially given the EV space that we've been highlighted, right? The latest trends in the industry show that the sales in Feb has grown 100% with more than 1,05,000 vehicles being sold, right? With the growth primarily coming in on the EV two-wheeler or the EV three-wheeler side, with other segments still lagging behind, right? The prospects look bright, but there is still that differentiation coming in from different segments. How do you see these trends going forward?
So I think we started financing electric vehicles about 4.5 years back, and even at that time, it was very very clear to us that EVs are going to scale significantly. And uh, but if I just go back to the point where we said we're going to focus on EVs only, uh, the decision was made primarily because we saw a huge economic value proposition for the driver, right? So the ability to earn more money, the ability to take net more money home, etc., was much better in the EV segment, and that was primarily for a commercial use case.
Mhm.
Now, the way I think of it is that if I uh, look at electric vehicles, I'm fully convinced that in the commercial electric vehicle space, whether two wheelers, three wheelers, four wheelers, whatever the vehicle category may be, there is a clear case to convert to electric vehicles.
Right.
Right? And that trend started about 5-6 years back with low speed three wheelers, and of course now it's high speed three wheelers, two wheelers, four wheelers, etc. And that trend will continue, and we'll see a huge growth, four times, five times growth in electric vehicles in the next few years,
Right.
right? Especially on the commercial vehicle side. Obviously, of course, on the personal use vehicle side as well, I think there is a, it's a, two wheeler sales going up is a good example where on even on the personal side there's value because you can actually save money by driving those vehicles because
Absolutely.
the cost of purchasing the vehicles is similar to ICE vehicles today. Of course, on the four wheeler side, the costs are a bit higher, and then therefore cost saves per se are unlikely or it takes a lot of time, and therefore from personal consumption standpoint, four wheelers etc. become a bit challenging. Right?
Mhm.
There's no economic case. There can be other cases like sustainability and all of that, but there's not an economic case over there.
Right.
And what we find is obviously in India, if there's an economic case, then the adoption is generally much higher.
Exactly.
Now, so irrespective, so I think in terms of to answer your question, the trends are going to continue. Today, if I look at three wheelers, about 30 to 35,000 electric three wheelers get sold every month in India.
Right.
I believe in the next 4-5 years, this number alone will go to about 150,000, and that's more than the total number of three wheelers being sold in India today. About 60-65,000 get sold in India today, but I
Right.
think just electric will be about 150,000 in the next 4-5 years, right? So that's the kind of scale we're going to see. And obviously, two wheelers, I think, will almost 70-80% convert fully to electric in the next 2-3 years. And of course, that's a very, very big number, almost like maybe 600,000-700,000 a month or so.
Very interesting. So let me break my next question into two parts. One is the push that both state and central government has been doing on this space to sort of achieve the sort of net zero objective or the energy security per se, with central government committing 35,000 crores plus on the on this budget specifically, with sort of newer and a lot of reforms coming through in terms of extensions of a lot of BCDs coming on the custom duty side as well till 24, and a lot of state government taking specific steps in sort of adopting a lot of EV focused policies by making a lot of push on sort of scrappage policies coming in, replacing older vehicles with only newer EV vehicles, or subsidies being pushed out. So my two-part question would be: one, has the government done enough, or do you think there are more specific reforms that needs to come in to keep the impetus going? Second, specifically on the segment that you are sort of targeting at this point of time, I'm sure you will grow and you will add more and more products as we go along, but what are the key drivers that you see that are required to maintain the demand at this level?
Okay. So I think uh, if I talk about the government's role, first of all,
Right.
I would say two, three things. First is that uh, as a citizen, no matter what the government does, it never seems enough, right? You always want them to do more. Uh, but, but I also think, as I also think that no industry can be created only by the government,
Absolutely.
right? So unless the product is good, unless the value proposition that it offers is good, it doesn't matter what the external push is, it will not get sold, right?
Mhm.
So overall, if you ask me, I think the electric vehicle segment will get created with scale on its own potential rather than through any external help. That's the first thing. Okay,
Interesting.
and I do think there is enough evidence to show that electric vehicles, especially for certain categories of vehicles, especially two-wheelers, three-wheelers, maybe slightly lower value four-wheelers, adds a lot of value over the ICE vehicles. And I'm talking just economic value. I'm not talking about other things like sustainability, environment, etc. That is an additional bonus.
Right.
Now, keeping that in mind, I think the adoption will happen. Now, from what the government has done, obviously that has helped with the initial impetus, right? How do you get people to change their hearts and minds about it? I think that's where
Right.
the government has played a huge role, central government and state governments. But central government was obviously much ahead of the game on this,
Correct.
right? So I think that initial impetus has been given by the government. The scale and adoption has started, and I think the scale and adoption will continue to happen on its own merits rather than based on subsidies and things like that. Obviously, whatever else the government does is always welcome, but I would say as an industry, one should not wait for it. As an industry, one should focus on how to create a better ecosystem for the drivers, for the vehicles, uh, and once that is there, then the growth will continue.
That makes a lot of sense. Uh, okay, let me put it slightly differently. I understand where you're coming from. You're seeing that uh, government impetus is more like a support lever at this point of time. The industry has to stand on its own two feet. So, what do you think are those critical sort of matrices that you would want this to work at, or collective unit to work at, so that this actually becomes successful?
Yeah. So actually, ultimately, uh, what we want is the vehicle to perform,
Absolutely. Hmm.
and I think that's the basic thing. If the vehicle is good, it performs, it has a long life, it saves money, right? I think those are things we have to look at. Now, today there is a lot of uncertainties around electric vehicles. What is the life of the vehicle? What is the range of the vehicle? Will the warranties be covered on, or will they be honored or not? Who are these OEMs who are coming up? Because there's so many new OEMs that are coming up who are not very well established. Will the servicing happen? Will battery replacements happen? What is going to be the overall cost of ownership over long term, given battery replacements and all of these things? So
Correct.
there are a lot of apprehensions today in the market, and most of those apprehensions are related to vehicle and vehicle performance.
Right.
And those apprehensions are also right, because these vehicles have not been on the roads for very long. They've not been on the roads for many years. So one does have to test them over a period of time. It is
Right.
not enough to say that because there's an ICE vehicle running for, I don't know, 100 years, electric vehicles will also run for that long.
Right.
Right? Electric vehicles have to go through their own journey, irrespective of who the OEM is,
Mhm.
because it's about product form, vehicle form, technology, battery technology. There's so many things, and also about distribution and sales and service network. Right?
Absolutely.
Today, even if you have the best electric vehicle product, and if you can't provide service in a small part of the country, then that vehicle is no good. Right?
Mhm.
So there has to be a journey, and I think we have to wait for that journey. Right, and that's why I think there's 3-4 years before we actually get to a stage where we say that electric vehicles are clearly very well established. Okay, so for me, 3-4 things have to be seen very, very clearly. A, do the products have the same type of life as an ICE vehicle?
Right.
Second, the performance that is being promised in terms of range and charging times, etc., are they happening or not? And third is, are we able to build a sufficiently good service network, not just for the vehicles, but also for batteries and battery replacements? I think these three things, if they can be very well established, I think everything else will get sorted out.
Right. Great insights. Great insights, Samir, on this. I think a lot of time there is only talk about the demand side of things on the industry, where everybody thinks that yes, there is demand. Yes, we're going to see an uptick for next 4 to 5 years, but nobody really underlines what are the key aspects that are required for this to grow at that certain sustainable levels. And I think these key matrices will help a lot of people understand that what is required.
Also, I'll just maybe add one point. Generally, the detractors talk about infrastructure, charging infrastructure.
Right.
Let me just assure everybody that is not a concern, right? Because if you look at two-wheelers, three-wheelers, they can be charged anywhere through any plug point, right? So you
Exactly.
don't necessarily need a very sophisticated infrastructure for that. And I have
Mhm.
not heard anybody who's not been able to adopt a two-wheeler or three-wheeler because of infrastructure issues,
Exactly.
right? So my point is that I think we should not focus so much on that, and infrastructure, etc., is basically a consequence of scale. All those things will come. First, the basic product has to be right. Let's get that right. Everything else will come.
Interesting, interesting. And I think a lot of technological advancements on the battery swap side have also helped, especially on the lighter vehicle category. Let me put it that way, as compared to something on four-wheeler or buses and things like that, which have made the adoption easier and faster, probably to say like
Absolutely,
that.
absolutely agree with that. I think there are so many different opportunities, different business models that are available, and all of them are helping the drivers. So I think that's amazing that we have so much of variety in the EV space.
This is probably the most interesting time in spite of the nascency of the industry itself. I think everybody is hoping that this takes the right shape and form as we go along and actually delivers what is the expectation across all.
That's
So
right.
okay, this has been interesting. I think we've established that the demand is definitely there. Of course, there are certain key drivers that need to be there for the demand to sustain over a longer period of time, and that has to stand the sort of test of time per se to say. Now, coming specifically to the because you picked up very interesting points when we started discussing on the nascency of the industry itself and the ability to underwrite something like this, where you do not have sufficient track record, right? So, if we have to specifically talk about your business model, and if we sort of break it down under 3 to 4 aspects, key aspects, which could be sourcing, underwriting, collection or credit cost related, and capital. If you could give us the insights of how do you think about each of these pillars in order to building your business model, that would be helpful.
So let me first start with underwriting.
Right.
The way I think of it is there is a clear distinction between underwriting the customer risk and underwriting the product risk, product being the vehicle itself.
Right.
In a traditional ICE vehicle space, you underwrite primarily the customer because the vehicle is established, right? And you
Right.
have those resale value grids and everything. This vehicle will sell for this much price and so on and so forth, right? So you don't necessarily need to underwrite the vehicle, but in this case, you also have to think about the vehicle itself, right?
Right.
And I think that clear demarcation is very, very important. So that's the first thing. Now, it's very interesting that we find that a lot of the electric vehicle customers that come to us, they are first time borrowers and they are first time drivers.
Hmm. Okay.
Okay. So which is a very, very good challenge actually, because ultimately that means there's no credit history, there's very little or no banking transaction and so on and so forth on
Right.
one side. So underwriting that customer becomes challenging, and the vehicle is also more or less similar because it's just very new to the market. It's been around for maybe a year or two, and not very well established.
Right. Right.
So what we've done is, uh, as as I said at the beginning, we've clearly focused on how to underwrite that customer segment, that kind of segment, a thin file kind of a customer segment.
Mhm.
And how we do it is we look at human behavior, personal traits, behavioral traits of the customers to underwrite that customer. So we look at things like psychometric analysis to understand intention to repay. We do an honesty check on them. We do some biometrics on them to complement our psychometric tests, to look at fraud, identity, and those kind of things, right?
Right.
And of course, we try to do everything that a normal financial services company would do as well, to the extent that's available. But beyond that, we've actually built a lot of different innovative ways of underwriting people. Then on top of that, we also embed telematics into all the vehicles, which also means that we then keep a very close check on the vehicle and the loan through its life. So it's not that you've underwritten and that's the end of the story. You have to kind of uh, make sure that you keep a very good check on how the vehicle is performing, because if the vehicle runs, only then you get your money back,
Absolutely.
right? So that's on the customer side. Now, on the product side, clearly we are no experts in product development and engineering and so on and so forth, or manufacturing of vehicles. So, what we've told our OEM partners is that look, product risk we don't understand. Nobody clearly understands this. The product risk may be very low in future. It could be very high in future. We don't know. It's somewhat an unknown quantity today, or it's unquantifiable today.
Right.
We said we have to create a mechanism where the product risk has to be jointly shared between multiple parties so that we can jointly help scale this segment. Right? If I look at any of our partnerships, whether it's with OEMs, dealers, insurance providers, telematics, fleet operators, e-commerce companies, and so on and so forth, there are many, many partnerships that we've built.
Right.
And each partner brings an opportunity and a risk mitigant to the table. The opportunity is obviously how to scale this business, how to generate leads, how to solve a problem for the customer so the vehicle keeps running all the time. And there's a risk mitigation as well for us. Right? So, give you some examples. We've told the OEM that if the vehicle doesn't run properly or it doesn't run to the standards that you have promised, then would you buy that vehicle back? Right? Can you say that yes, you believe in this product fully? If you can't do that, then would you, if there's a loss or there's a very low residual value left, are you happy to share some of that loss with us? Or there is no secondary market, are you happy to establish a secondary market with us? Right? So at every dealership, we created secondary markets. We repossess a vehicle and take it to the dealership where we refurbish it and resell it. Right? So in that sense, we also create secondary market. So there's a very different kind of a structure that we have with our battery swapping partners. We've said, can the EMIs be collected at your swapping points? Can you stop a customer from swapping the battery if the EMI does not get paid? Right? With the fleet operator, we've said, can you pay the EMI before you pay the driver? If the driver leaves your ecosystem, will you help redeploy that vehicle with another driver? Right? So everybody is bringing some opportunity and some risk mitigation.
Right.
In that sense, we don't know what the overall quantity of the risk is, but we are dividing that risks amongst various partners in some way or the other in ways that is palatable to them and is a part of their own business process as well.
Okay, this sounds very interesting because sort of you've created multiple layers of risk mitigation through underwriting. So sort of taken the expertise of each product versus the people. So everyone who's an expert in their own field is underwriting that particular risk in a manner. And the ecosystem is coming together then to give a full coverage, because a lot of partners that we talk to, the access to the end customer, the fragmented market, the loan to LTVs that come through, and the resale. These are the primary 3-4 factors that are always highlighted as an issue in terms of underwriting a market like this, which becomes sort of challenging.
I agree with all those issues, by the way, right? Those are issues. Right. But given those issues, how do you solve for those issues? I think that's the main thing. And as I said, you can't look at it with the same lens as you look at the ICE market. Right? When you start talking about low amount, LTV, all of these things, then again you start thinking about how it is done for ICE. Right? And don't get me wrong, those things are very, very important and those things are very, very relevant. I'm just saying that the solution to all of those may be slightly different for EVs today. Maybe 3-4 years down the line, it will be the same as the market matures, but today the solutions are slightly more challenging. They're slightly different. And that's why I said, ultimately, I don't see this as a vehicle financing business at all. I see this as an ecosystem creation business.
Okay, very interesting. Yeah. No, love the idea. Actually, the way you've put it actually is the crux of solving this problem in the long term as well. Because as a financier myself, right, my first comfort goes to those static cohorts. How has the track record been? That's the genesis of an old school thinking in terms of how you want to look at. But this industry being so nascent that sort of information is never available for you to start a discussion with, and hence probably this way of new age underwriting as well as combining the experience or expertise of all the partners within the value chain sort of helps and solve this in a long term.
That's right. And I'll just add one point, Gautam. Something just came to my mind. I was in a discussion the other day where we were talking about data and how data is going to be leveraged in the EV industry.
Right.
And I started by saying there is no data, so you have to first create the data. how to leverage the data is a second step. First, you have to think about data creation. And today, all
Exactly.
the people in the EV segment are their primary responsibility is data creation, and then of course leveraging the data for good use.
Great, great, Samir. I think these are very interesting insights. If you can just also spend a minute on the collection side of things, right? Because I think, like we said, credit cost is something that whenever I have a discussion with any of my partners, that is the first thing that comes to mind. Boss, leave alone whether they lie in a high range or a low range. How do I even come and assess that number? Like you also mentioned, because there is not sufficient data. So, how are you guys thinking about it or putting in the right kind of risk mitigants around it?
So I think, generally speaking, collections is a very difficult business,
Hmm.
uh, and in EV even more so, because we find too many vehicle related reasons for people not paying, right?
Hmm.
Vehicle not running, battery not performing, and so on and so forth. Whether those are right reasons or not, I don't know. I'm not getting into the whether they're correct, but at least perceptionally, that is what you get to hear, that my vehicle is not performing, and that's why I will not pay the EMI,
Right.
right? So I think, so from that perspective, collections is challenging. Uh, Now, there are multiple ways to look at how you can solve this. One is obviously, as I said, we've embedded telematics into all the vehicles. So we actually know how much the vehicles are running. We know how much time they're taking to charge. We know what the range of the vehicles is per charge, etc. So in that sense, using that information to derive an answer rather than what the perception of the user is, you can actually look at that also, right? So that's one. But obviously, I mean, that's in a way, it's just you'll just get into a debate with that. You won't necessarily be able to collect money, right?
Right. It's more like I have the data to tell you what this is going well.
Right. So what we've done with collections is, uh, a large number of our customers, as I said, are financially excluded. They don't transact on banks and so on and so forth. But we've been very,
Right.
very focused on collecting money through bank accounts, right? So that's something that we keep educating the customers about. And even today, the primary mode of collections for us is through Natch only,
Right.
right? But having said that, that percentage is probably lower than what you would find in other industries, which
Sure.
means there is also an element of cash collection and feet on the ground, people making payments at the dealerships and so on and so forth. And those are areas that need to be solved for. Now, how you solve them? I believe there are two, three ways you can do it. One is that telematics is very good because that gives you a lot of data to proactively look at collections, right? If the vehicle is not running for past few days, you can make a call to the customer because you know there's going to be an issue with payments this month,
Hmm.
right? If it's
The
if
early
the
warning signals coming through.
yeah, early warning signals coming through. If the customer drives lesser than the average customer in that area, you can prompt him and say, or nudge him to say that, look, you're driving a bit less, you should drive a little bit more. You're less productive than everybody else, but if you drive so much more, this is what you can do. We always tell our customers, if you drive a 16 kilometers extra a day, that will pay off our EMIs and your vehicle becomes free. Right, so trying to just push them to drive that extra few kilometers every day.
Right.
Right, so that's on the one side, which is more sort of data driven. The other is sort of behavioral, and this is where I have a huge challenge. A lot of our customers don't use digital payments,
Hmm. Okay.
right? So they don't use QR codes, e-wallets, and so on and so forth, which means that they're not used to earning income digitally, they're not used to spending their money digitally. And then,
Right.
therefore, why would they then change behavior and only pay their EMIs digitally,
Hmm.
right? So the way I
Exactly.
think of it is,
Hmm.
this is not an EMI problem, it is a income and spend problem, right? So we have to first change that behavior. Can the customer start making their money digitally into their bank accounts or into their wallets? Then can they start spending through them? And then third step is they'll start paying our EMIs through that. Right. So this is something now we are working on. This is obviously long-term behavioral change that we'll have to cause. This is something we are working on. It'll take time. We'll need support of a lot of different partners, wallet companies and digital payment companies and so on and so forth.
Right.
Right. But that's again in the long term. That's how I think of it. That's what needs to happen.
So very interesting. Actually, you've drawn parallel to one of the more traditional and old school businesses under MFI industry, which actually went through something very similar, right? Digital connection was sort of unheard of in MFI. Everything was cash, more societal and sort of community driven rather than digital. And discussions with even the biggest players in the industry said was digital is very, very difficult to be brought in. And now we see that the entire industry is actually moving towards that trend and seeing a lot of value coming in from that aspect as well, combining a lot of technology in the collection side. So I think very interesting that you've brought this on so early that probably there could be some sort of overlaps that we see from that side as well.
Absolutely.
Now coming Sabir to the capital side of things, right? India sort of has been on the EV sector has been sort of, let me put it this way, that hot sort of an sector where we've seen very decent amount of funding coming in with close to 1.6 billion being funded over 2022, and India being fourth largest only after US, China and Sweden. So we saw a lot of new early stage as well as late stage investment coming in. However, there has been a bit of a funding winter that has come in with especially the overhang of some of the recent events over SVB and other bids. How do you see this going forward, and what are your thoughts on this piece specifically?
So I think capital raising in EV segment has been very, very challenging.
Okay.
Right, and that's both equity and debt. Yes, of course, a lot of deals have happened, but I would still say broadly compared to the demand for capital, the supply is extremely weak.
Mm-hmm.
And that's been the case since we've been in existence at least. But what we do see is the last 15 months, there has been a clear shift. Now that clear shift has been caused more by the media attention that EV is creating. And that is obviously helping bring capital to EVs as well.
Right.
Now, look at some of the deals that happened a few years back. Most of them were on the OEM side and maybe in the manufacturing side, and maybe one or two in fleet and so on and so forth. Mm-hmm. It's only in the last 15-18 months that you've seen a wider variety of deals happening across the segment in charging, swapping, financing, and a lot of other ancillary services to EVs.
Right. Okay.
Now, I would say last 15 months obviously has been very good from our perspective as well. It's been good. It's been easier to raise capital in the last 15-18 months. One very interesting trend I've seen is that, which we find, and I'm sure it's true for other people as well, that debt capital is more freely available than equity capital, which is very, very contrary, because you would have expected, given the stage at which the industry is, right, and the unknown risks that we still have, equity capital would be more freely available. Right. But that has not been the case. I think equity capital has become very cautious, more so than debt, which is becoming slightly more adventurous now. And rightly so as well. Right, and of course, as I said, if I look at it today, generally speaking, the market is very good both for equity and debt, obviously. But if I look at the recent events, obviously, there is a funding winter for a variety of reasons. Then there's the recent issues with the banking sector and so on and so forth. All of those things obviously cause a bit of a distraction here and there, right? And which means that it basically gives rise to 2-3 things. One is that it becomes very difficult to raise funds. It takes longer to raise funds. You don't get the kind of valuations that you want. Your whole process of due diligence, etc., gets elongated. And you as an organization are not in a position to negotiate very well with investors, right? So all of these things happen. But my fundamental belief is still that if your business model is sound, the basics are good, you will be able to raise capital, both equity and debt, right? And that is what we observe as well. Obviously, you have to make some compromises given the macroeconomic environment, and I think in a way, obviously one doesn't like it if you're running your own business, but one can also understand the other side, why they are saying what they're saying and where they're coming from.
So generally what we've seen is, and it's very interesting point that you brought up, that debt is more freely available for you than equity per se. Over the equity side also, we've seen these trends changing, wherein rather than only focus on the growth numbers or the top line, a lot of shift has happened towards unit economics positivity and the bottom line, right? Now, for a lot of businesses which have been in slightly more mature industries, it makes a lot of sense, right? At the end of the day, business model has to make sense, deliver a buck on the dollar, and then that is how it should be. For a industry like EV, which still is sort of like you said, nascent in its journey, still to establish in terms of how it will pan out in terms of the maturity of not only the product per se, but also the trends and the support infra around it. Uh, the general thesis would be that it will require a lot more investment upfront, right? Where you might see some of the effect coming on the bottom line. How do you see this playing out?
Look, I think, okay, personally, I would say that if you don't have positive unit economics, you should not do the business.
Good to hear that.
Yeah, I think it's fair that if your capital expenditure, etc., is very high initially, I think that makes sense. Your
Mhm.
marketing expenses may be high initially, that also makes sense. But at least at a contribution level, you should be positive, right? I mean that's, to me, that's basic business.
Mhm.
If your contribution is also not positive, which means your direct or direct cost of selling the product or making the product is not covered, then there's no point in doing that business, because once you get into that, it's very difficult to get out of it,
Right.
right? You can't certainly convert a negative unit economic company to a positive unit economic company. It's not possible to increase your margins and your top line, etc., over a period of time. So I think your starting point has to come with margin. And I think when we look at industries like EV,
Mhm.
given that it's still in its early days, etc., I think there is more opportunity to make better margin than when the industry gets very well established and you have a lot of competition, because then you're always trying to look at how to cut the competition. But when the competition is lower, there is no reason to actually work on negative unit economics.
Hmm, interesting. So, as a banker, I can say this is music to my ears because our fundamental thesis is that we fund only businesses which we see as unit economics positive, because then it's about economies of scale where you're trying to absorb anything which has been put as investment or which has been sort of capex on the growth journey trajectory per se. But if you're fundamentally unit economics negative, then you're just for every dollar spent, you're losing more money, and that really does not work for the debt front from that standpoint. So point well taken and appreciate the viewpoint as well. Now coming to the debt side specifically. So like we started off, Vivriti Capital is very excited to work with you guys on the balance sheet side as well. And hopefully we will take the engagement much larger. But what I wanted to understand is, given the nature of the industry, what sort of further debt solutions you guys would are looking forward to coming from lenders like us, so that the engagement as well as the potential partnership can be made even better, or would actually sort of provide the value that is coming out. So probably we can hear your thoughts first, and then I can add on to that something that what we are also looking to offer. Please.
Yeah, so I think there are a lot of ways one can partner on debt. Obviously, term loan is one of them. There's co-lending, VC partnerships, etc. There can also be other things like reducing interest rates based on third-party guarantees and so on and so forth.
Right.
Uh, right? There's also a lot of impact capital available, and it might be in a way easier for Vivriti to access that capital than it may be for us to access that capital, given the size of balance sheet, etc.
Right.
Right? So I think that's another opportunity, and I think that's probably a very very large opportunity. I think there's another thing that uh, one can think about is just kind of building on the impact side. Obviously, we are a very focused company in the EV financing space. Uh, but from your perspective, obviously, you would have a large portfolio of financing partners.
Right.
You can also think about how to pool all those portfolio companies to raise larger impact capital, but also think about how uh, we can also bring in a carbon credit play into that as well, to see if that can help offset costs even more. Ultimately, the end user will benefit from that.
Right. Okay. Very, very interesting. Actually, okay, let me put my 2 cents on this. So we ourselves are a multi-product lender. Like you mentioned, that what our thesis has been that any partner coming through the door, the engagement is higher if we try and deliver products which solve the issue at hand or provide value coming through the relationship. Thank you, Samir. I think thank you for taking out the time. I think this session was great in terms of the insight coming both on the underwriting side. I found that to be the most interesting piece in terms of how to look at the NTC and thin file, and probably I'll come and connect with you to understand more on that side as well.
Yeah, thank you very much, Gautam. Thank you for the interesting conversation.